Hey everybody, it is Wednesday, the 6th of December, and the market lost a little bit of ground here today in the S&P 500. Last week we broke to a new high for the year, and since then we've had some trouble. A couple of things occurred today that are a reason for caution. One, we broke this trend line that has been holding this market up. So you can see we broke it and closed below it. As I often say, breaking a trend line doesn't mean we've reversed. It means the rate of ascent has slowed. And certainly we're aware of that because the market has been pretty sideways the last week or so. This is our important level for the near term, really 453.5. We spoke about that over the weekend as well. Here's what I think is likely to happen. I think that, we've had this huge run and really haven't had any time to, see a real pullback in prices. We've seen a time correction, which is bullish, but a little shakeout would be nice. And it might occur something like this, where we come down through this VWAP, capture some shorts, rally back up, and then maybe get stuck under the 5-day moving average. And then perhaps we drop down to the next anchor level, which is from this low right in here. Right now, I'm not bearish on this market. I'm certainly cautious, though. I have been that way for the last week and a half or so as we've been just kind of grinding in here. But when we see these markets rolling over, if that's the case, I'm not going to get aggressively short. I might day trade a little bit on the short side, and I talk about these stocks that, maybe are in downtrends. I posted this on Twitter, how Meta is in a downtrend, Nvidia is in a downtrend. I might look to buy some of these stocks when they start to turn higher again, but I don't want to get short the names. That's just not my personality. I mean, there's all kinds of ways to the finish line here. I like an alignment of trends. So when I see the primary trend is higher, I want to be long. And I don't want to really take advantage of the short side. It's just not my thing. So do what's right for you. Here's what I'm kind of thinking is likely to happen. And it tells me that, more long trades are less likely to, or just long trades in general are less likely to trigger and or follow through here in the coming days. The Nasdaq, we have that pattern here, lower highs, lower lows. The 5-day moving, and that was broken yesterday. Today we got back to a lower low. So with a declining 5-day moving average, that's the key. We are guilty till proven innocent until we can see that rightened. You can see we are below the anchor from the similar point on the S&P 500. That is this low right here. That's the anchor on the S&P, and here we are in the Nasdaq. So relatively, the Nasdaq has been weaker, and it's possible we could see some deeper selling, perhaps down to the anchor from this gap. Maybe we go in and close this gap right here. I know a lot of people look for gap closures and think they must happen, but there's going to be a lot of time before we get all of these gaps in here filled. So a little bit cautious here. Seems likely that we could drop down towards this level right in here, maybe undercut this low and then see a bounce. That's often what we see happen. The bounce that we did see here the last couple of days has occurred from that 20-day moving average, but it's not support yet. It's just a little bit of a bounce. With a declining 5-day moving average, it's just not to be trusted. The Russell 2000 is maybe running out of a little bit of steam here after this nice rally. So I continue to have very little interest in the Russell 2000. I think that overall it's still in this bigger trend and sideways action rather, not trend. And that there are opportunities if you're interested in that. But I prefer, like I said, when the trends are aligned. The semiconductors are still the weaker one, relatively speaking, and it seems highly likely that we'll get a test of the anchor from the October low. That would bring us down towards 156-ish. We have definitely had some opportunities in here to trade the long side if you're a short-term trader, but we have a pattern of lower highs and lower lows, and we have a declining 5-day moving average, so I'm not ready to trust any rally attempts yet in this group. Biotechs have continued their bounce up through this 200-day moving average in the year-to-date anchor. The pattern is higher highs and higher lows above a rising 5-day moving average. So if you're long, still be aware that this is likely to be a place where some profit taking occurs, but definitely don't want to be short, not with this pattern of higher highs and higher lows on the intermediate term time frame. Financials are starting to show a little bit of weakness where they're supposed to. That is the top end of this band that has been resistance after a big rally. So again, you ask yourself, where does it come from? 3150 up to 3625. That's a big rally. That's 12, 13%. uninterrupted in the course of a month. Where does it have the potential to go before it's likely to encounter a source of supply which might become resistance? Well, this level of interest, we're interested in it because it has been resistance in the past, and maybe it will be again. So far, it looks like maybe that's where it's slowing down, and we saw today's gap up fail, so we could see from a failed move comes a fast move. I would be looking for a potential that something like this might happen. Let's take a look at the anchor off of this low right here, and you can see we broke below that. We've got the anchor from this gap, which could bring us down towards that 33.50 or so. And at that time, this 20-day moving average would also come up and catch up with that. So that kind of seems likely to me. I'd just say, we had that pattern of higher highs and higher lows. That has now been interrupted with this break lower. So you've got to be extra cautious in there. Energy names continue to drop lower, as they should. When you look at crude oil is getting annihilated here, which is great. For anyone who puts gas in their car, or many other things in the economy. Why is that anchor not anchored properly? I suppose it doesn't matter because we're so far away from it, but that should be off of that peak. Anyways, we're coming into the anchor from the pre-COVID high and the COVID low. So this area is where we have found support previously, and it might become again, but right now there's no evidence, and there's no reason to get involved in these energy names right now.